Welcome to the Stash Cast, where innovation meets real estate. Let's dive in.
Peter, thank you so much for coming to join me today. I really appreciate it.
Good to be with you, Stash.
I had a chance to do some research on you as well, and you've had quite the career and background. But for the listeners that haven't had a chance to digitally stalk you, if you could give us a quick overview of who you are and what you do, that would be great.
Sure. I think most of your listeners have heard the term serial entrepreneur. I guess I am probably one of those people you'd find, under that definition. At 23, I was in law school, having looked into being a golfer as a career and decided that it was too precarious and too dangerous for a future. I was a college golfer, a pretty good player, but I spent a year in Florida and couldn't make a lot of headway and was getting beaten by 15-year-olds on the golf course when they're 8 under and I'm 1 under. I think it was a rude awakening, but I had already gotten admitted to law school. So I went to law school with the idea of representing athletes. So I actually started my own business while in law school as a sports agent before I was a sports lawyer. Started that at age 23. Since then, I did that for more than a decade, probably a decade and a half. Ended up running a golf division at one of the largest management companies in the world, and just realized approaching my 40s, I didn't want to be traveling around 26 out of 52 weeks a year, following my athletes around the globe. It was just, I wanted to be with my family and spend more time. Went from there into a sports ticketing company, or as the president of a sports ticketing company. Did that for 4 years. It was one of the great ideas that was a failure in my background. It was an amazing concept of trading futures for the right to attend the greatest sporting events. They were covered calls, if you will. And we covered seats, so we'd get deals with all the rights holders, NBA, NHL. We did deals with Major League Baseball, soccer teams, all the big bowl games, the NCAA. We had Final Four seats, and we offered options to fans for the right to attend those events if their teams made it. So they could buy options on their team. At the same time, StubHub was coming out. This company called Ticket Reserve was coming out. And StubHub blocked and tackled and had a boring idea and became a great company. And we were idea that failed based on money management from the company and a lack of very concise messaging to get the understanding to the marketplace. Most people don't understand that they could at the time buy an option for the right to go to a game. They just wanted to buy the ticket. So it was a difficult message, and that was part of the reason why the company failed. But I did learn a lesson and went on to bigger and better things. Ended up developing 21 surgery centers with my time at a company called Sturge Center Development, and was the leader in the industry. Company went on and did over 300 surgery centers. That got me into the development world. And then from there, I started getting involved in the multifamily world. And so that's where I am today. And I'm both investor in real estate as well as an operator of a property technology company called Leasing that focuses on assessing. It does two things. We have two tools: assessing and training leasing professionals. So it's up to date where we are today.
So where did the idea for Leasing come from?
It's evolved. We actually went into the business in 2019, which doesn't look at all like where we are today. The business was a talent replacement company for the temporary workers that were all over the country in property management offices trying to do leasing. And so we figured we could hire people outside the industry, train them up, and place them out in the marketplace and outperform these temporary workers that were out there without training. And so we did that, and we did very well at it, and ended up having 80 or 90 people that were part of our company at one point. And then we realized that we could have much more impact on the industry if we were just more of lease up professionals and distress leasing situations. So we ended up doing that, and we competed well against established companies in the industry that does a very nice job. And we were either class, or we were the top two probably in the industry at going in and fixing problems and then leaving. So we did that for a couple of years, and we probably handled dozens of properties where we did a great job, went in 90 or 120 days later and left, having righted the ship and gone from high 70s oftentimes to the mid 90s of occupancy and stabilized the properties. But then we realized some of these properties were getting into trouble after we left because we didn't really leave the resident people with any advanced training. And so we said, listen, we can run 50 teams at a time out there in the industry and be minimally impactful. We decided we wanted to be a much larger impact on the multifamily industry, where 100 million people live in apartments in the US at this very moment. And so to have that kind of impact on that kind of a scale, we knew we had to train the people that were already out there on these properties. And so we have these skills, we have these training vehicles, and we've been developing them since we had this realization and this goal of being more impactful and wider reaching. And so that's how we ended up where we are today. We evolved, if you will. We had a couple of iterations where we were successful, and we decided we wanted to try to push it a little farther and have a bigger impact.
So I guess how were you able to come in and turn around these properties? And then what was the issue with the lack of skills sticking? Because one would think that if you come in and say, hey, here's how we fix the problem, that some of those skills would have stuck.
Yeah, I think if I break it down a little bit for you, how we do an assessment today, that might give some insight as to, what the problems are and what we addressed in our earlier days. So today we have an assessment tool that rates 3 Ps. We call the 3 Ps. We call the person doing the leasing, the process that person is following, right? The process is really important, and the property itself. You have these 3 really important topics and areas to cover. And if any of them are not doing well, then they have an impact on the results. What we found back in the day when we had to replace people was different things, but there were some commonalities. The leasing position is a tremendous turnover position. It turns over between 1 and 2 times a year. And so that's very disruptive and destabilizing. And so just the lack of stability is a big problem. And it's not something that's going away at the moment, unless the industry itself, which we preach regularly, will treat this position as much more important than it's being treated today. We feel that the leasing person should be the first point of contact, tip of the spear, person that sets the tone, the brand ambassador, if you will. It is really that important of a role. It's a leadership role in some ways, even though it's not a management role. So it's really important that the industry wake up a little bit and pay attention to this, because if you stabilize the leasing position and you train it up, you will have a major impact on your property. It'll add value, it'll reduce risk, and it'll add stability and keep your rent roll solid. Because if you think about it, the person that you meet, if that person's gone the next time your lease comes up for renewal, that's a destabilizing factor. And that's what's happening in the industry. I think it all starts with paying attention to this position in the industry a lot more than it's happening right now. And so we're preaching out there a little bit, but people know this isn't really hard to figure out. If you're not fully occupied right now, or you're not hitting your per square foot numbers on your leases, there's a reason for that. It might be the traffic, it might be the property, but there's a pretty good chance that the people and the process being followed are not ideal. And so there are probably gaps in performance that our training side of what we do can help train up. And what's cool is we're already in our 3rd iteration of our training program, and it's getting better and better, and it's getting more gamified, and it's getting to be more bite-sized. And so when we first started trying to train, we were very hard line on everybody had to be trained on everything. That didn't really work, because we were running into people who not only were the newbies out there, but they were people that were 10-year leasers. And so the 10-year leaser doesn't necessarily need 100% of the training. But if we do run an analysis on them, they might have 20% gap here and a 10% gap there. In a bite-sized training where you're not really disrupting operations, it's really effective to try to help that person. It makes the person feel better about their job when they're performing better, and stabilizes the whole team and the property.
Mm-hmm.
The Stashcast is brought to you by Needle. What if you could use data and analytics to predict real estate transactions? With Needle, you can. Check it out at needle.us to learn more.
What do you think the biggest myth about leasing is?
I think the biggest myth is that properties lease themselves.
Yeah.
I've been on a conference panel a few years ago where literally maybe one property of one very large management company did lease itself online, right? And so they were thinking, oh, wow, this could happen over and over again. Yes, we are moving closer towards AI helping in leasing, closer towards more units being leased remotely because people can't necessarily be there for a physical tour. They have to do a virtual tour. But that was a giant leap that we were going to go right from having leasing people to put the stuff up there and it will lease itself. If you do that, you're taking a giant risk. So I say that's the biggest myth I've seen.
Yeah.
I don't want to dominate the conversation. I'd love this to be two-based. But the second biggest myth is that the leasing professional is not a critical role. Okay. And maybe people pay lip service to it and say, oh, yeah, our leasing people are really important to us, but they're not living that way. The world doesn't show that importance to them. And hence, they're constantly looking to replace the position because someone either moved on for 50 cents an hour raise or quit.
Right.
The myth is that the industry doesn't need to change the way it looks at the leasing position. It does.
Yeah, I think what you're saying is that the leasing professional is essentially looked at as an entry-level sales position. But in fact, they're, like you said, the brand ambassador. They're the first person you meet. Or if you have two properties, they're essentially equal in class and finish and rental rates. You're probably going to go with the one that you have a better connection with the leasing person. And in my brokerage days, where depending on the size of the property, oftentimes the manager will, if it's 100, 150 units, oftentimes the manager is the leasing person and they're doing other things. In our pro forma, we might cut the leasing down. And I guess what I'm hearing you say is that is not necessarily the right thing to do.
No, I think that's why we call ourselves Rev. It's revenue. It's a revenue-driven company. We look at ourselves as revenue-focused training. And you know what? In a day, we're in pretty unstable, unsure times right now financially, and yet more Americans are struggling to pay the bills than ever than in recent history. And I think we're at a breaking point. We're at a boiling point, let's say. And so if you're not focused on revenues, the guy down the street might be, right? The property down the street might be focused on revenue. There will be winners and losers today. In a hot market, everybody's a winner. All the units are leased.
Right.
It's easy to stuff. Maybe it does lease itself in a hot market. But you know what? I wouldn't call what we're in today a hot market, nor would I call a hot market normal. I would call today normal, where there's normally uncertainty. It's interesting. If you think about it, it is an entry-level position, right? But there is no upside in that same tranche. So if you want to stay in leasing, what happens is you typically get moved to a management position. You don't get to stay in the same position in leasing and have no upward mobility. So we're also recommending not only more focus on the position, but creating an upwardly mobile pathway for someone with talent in leasing. So you are developing the person, then you would develop maybe the office, then you would develop maybe the area, then you develop maybe the district, the region. Maybe your whole portfolio needs someone that's expert at leasing to manage that whole route. But it's really important. It has major impact. It's a measurable impact.
Who's your ICP?
Over the years of our operations, we've worked with very small operators, and then we've worked with the largest operator in the world, right? I think we're even more well-positioned today to work with anybody at any time. We're giving you the platform. We'll give you the assessment. We'll give you the training courses that are appropriate. And then it's up to the people. If you want to be good at something, you'll be good at it. If you want to go to school, you'll graduate. But if there's no reason to get better and the organization you're operating in doesn't see this as important, doesn't put an emphasis on it, then it's not going to happen. So I think it has to be a company decision. We want our leasing people to feel more appreciated, to be more educated, to be more supported, and then to hence become more leaders instead of just entry level. We don't want entry level leasing. We want some form of leadership there. And I always say to my people, and I have for the full time of this business, everyone's a leader and everyone's a team member, right? You're given a task. On that task, you're a leader. You're leading the company on this one task. But at the same time, you're part of a team. So don't lose sight of the fact that it impacts everybody.
Yeah, that's great.
Getting focus on leasing in multifamily. I see it as, I would say it's to some degree, low-hanging fruit. It's an easy, inexpensive, I wouldn't say quick fix, but medium time frame fix that if people are dedicated to getting better, you'll see major bottom line improvement and much more stability in your workforce and in your properties. And by the way, Stable properties, just to point out something you definitely know, stable properties get better financial treatment in the financial markets, right?
Mm-hmm.
If you have
Yeah.
a stable property, your insurance risk is lower. Your banking, you're going to get better banking relationships and probably rates, interest rates. You're going to, when you do sell your property, if that's part of what you do, if you're not selling, this isn't relevant, but if you're selling, you'll get a better cap rate. It's all of this stuff is stabilizing and creates value in the property. I look at the most unstable position as the place to focus to stabilize. This is the most unstable position.
I think you could put maintenance techs in there too,
This
because
is really true.
the
Maintenance is
interface while you're there.
it's really hard. There's just a volume needed of maintenance in the industry that is literally unquenchable. It's just so huge. I don't know that it'll always be a problem, but it's a big problem. And it's something people have talked to us about tackling. And I said, listen, let us tackle one problem at a time. Let us help fix the leasing position to the degree that the industry is better off. And then, you know what? There is a problem there on the maintenance side.
So you covered a lot of ground in your intro, and you've done a lot of different things in your career. So in building multiple teams and multiple ventures, what's the hardest part of getting people to buy into the new vision?
I really haven't had, I guess my teams haven't been the problem to buy in. It's hard to move a marketplace. I think getting a team to buy in is really just clearly explaining where we are, where we're going, and maybe it isn't a straight line to where we're going to go. And you're going to go 2 steps up and 3 steps to the right, bounce off the wall and come back to the middle because adjustments happen all the time. But we know where we're going. We know where we're headed. And by the way, even where you're heading may adjust. And I think people buy into vision. They buy into leadership. They buy into teamwork. They buy into feeling empowered. They buy into all of the things that matter for, if I come out of a sports world, team sports I've been in and around team sports my whole life. And so I take a lot of what I've seen in team sports, what I've witnessed and learned from participating in. A coach is pretty much a leader in that organization. I think a leader in a company, particularly a smaller company, is a coach. You're in there trying to get the most out of your talent, and you're trying to create other leaders. You need team leaders. So I don't know I think it's much harder for me to get the right messaging to a market that maybe isn't listening. And to me, that's because it doesn't think it has a problem, so it's not listening. Or it has bigger problems that it's dealing with, so it's not dealing with the one I'm addressing. And I told you about one great company that we started that did not succeed, probably because of messaging in the marketplace. We made deals with very large companies. The media company invested in us. We were a darling in the media and a darling in the sports world, but it didn't connect to enough of the public. And messaging is difficult. It's not so difficult internally within an organization, but I think even today, it's really hard to get the message out, even though there's more channels to getting the message out than ever. I think that diversification of media today makes it much harder. Back in the day, there were probably 10 ways you could do promotion, right? And today there might be 1,000 ways you can do promotion. Yep. Being good at this means you have to pick the right ones.
Yeah. So in having a failure like that, how do you deal with it? How do you cope? And then how do you pivot to the next step?
One of the other things I learned from that company that should have been tremendously successful, by the way, we were offered a buyout at 2 times. Our CEO turned it down, and we could have been successful very quickly.
I've seen a similar thing in my world where you're offered a big number and you think that, no, we can do much better. And then fast forward 24 months and you're out of business.
Yep.
Same.
I learned cash management much more after that relationship than I had before that. But you're so right. Look, our strategy here is pretty simple. Get to a certain point. We know we're a small operation. We're funded by the 3 partners at this point. I'm one of the 3. And we don't need money right now, but at some point to get as big as we want to get, we will probably talk to strategic partners. I've had at least 10 inquiries so far. I've had about 2 or 3 conversations, but we're too early for it. We have to show some measure of success first at an acceptable level. And then we would consider strategic partners, not just financial partners, literally someone that can help move our needle, maybe someone within the industry, multifamily industry that could help us grow. It doesn't have to be another prop tech company. It could be an actual owner manager of a large portfolio or multiples. And so I think what I learned is you don't have to always do it yourself. Taking on partners probably would have been very beneficial out of that relationship. We were maybe a little too isolated, thinking that we really had something we could, it was a tiger by the tail and it got away.
Hmm. What are your thoughts on AI, and will it ever replace the leasing professional?
That's a big question, right? Here's my overview thoughts of AI, and I'm not the perfect guy to answer this, but I still have an opinion. I look at what happened with the internet around the year 2000, 2001, and I saw how quickly it exploded and where we are today, 25 years later. AI just came on the scene a couple of years ago in any kind of mass, reaching the masses. It's going to go not at a 25-year pace. It's going to go by 2 and 3 year intervals and double and triple and quadruple. It's going to go so fast that I really believe that anyone that's not involved with AI right now, or at least learning about it and trying to incorporate it in some way, shape, or form into their lives, let alone their businesses, is making a giant mistake. It's that important. It's that impactful, and it's going to grow that fast. It's not all good. It's dangerous too. It's got tremendous upside and it's got tremendous pitfalls out there. And with that kind of overview, I'll try to answer where I see AI impacting multifamily leasing. So one, we're using it every day. We use it in creating our courses. We use it in our analysis. It's very helpful for us. But it's as good as you feed the data in, right? So it's data in is bad, data out is bad, okay? And so you've got to really get to be really good. And it's going to take you 6 months or a year to get to be really good at feeding the right information into AI. And it still will make mistakes, but that's okay because it's the greatest assistant you'll ever have. It's the most amazing personal assistant you've ever had. And so acting on leasing itself, rather than just training leasing and assessing leasing, I think AI will be, I know currently it's receiving some inbound calls. AI is being used in multifamily today to receive calls. And we use AI sometimes to make outbound calls. So if you can believe it, actually today, an outbound AI call is being inbounded by an AI receiver. And what we're finding on our end is that receiver isn't doing a great job. It's not where it needs to be today, but this is just tip of the iceberg. It's the very beginning of this, but it's going to come on fast.
Yeah, there's a lot of hope for, so I feel similar to you where you need to be plugging in and paying attention to it and understanding how to use AI. But as it currently is, and it is evolving on a daily basis, but as it currently is, it is not a full replacement. And I have been pitched and thought about and theorized about AI voice assistants to go out and make appointments, or voice agents to handle customer service, things like that. And what I believe is that, commercial real estate is a contact sport, right? And so like people, you can use these tools to help you be more efficient in your business. But at the end of the day, people want to deal with people. Right. So I think that
100% with that.
Having that perspective is crucial.
Yeah. And it's true. It was the feeling I had on that panel where someone was fast forwarding something that wasn't ready. Is it coming? Yes. Yes, it's coming. And is it a tool that could be used today? Absolutely. Yes. And we're going to sort through all of it. I think in commercial real estate, of which multifamily is just one tranche, AI will have an impact, but it's certainly not replacing relationships. Relationships are really important. And I think if I can go off script here for a little.
Yeah.
I have 2 daughters who are in their 30s and their husbands are as well. And they lived through COVID and they're all professionals. And I really do worry about the thing you just mentioned, which is that relationship building. And they spend so much of their time on Zoom calls and they spend so much is remote that I just wonder how much mentorship is happening, how much team building is happening. You can't really replace the human connection. You can certainly do a lot of work from away from home base and from with your clients and your teammates, but I think something's being lost. And I'm worried that this COVID generation hasn't had the opportunity to learn the things that maybe you and I have been exposed to.
Well, it's the post-COVID world. Personally, I've been working from home now for, I don't know, 6 months or so, and it sucks. I hate it. I miss having people around.
Conversations, literally.
Yeah. Yeah, exactly. And there is a missing part of the camaraderie. And also, you can have a log on a Zoom or Meet or Teams, pick your platform, but that doesn't replace the human connection. That doesn't allow you to see the humanity of the other people or really understand, hey, I noticed you're down today. What's going on? And you only see that because you've been sitting next to them all day or for a week or what, and they just seem off. And you can't really do that on a Zoom.
Here's one thing that I miss. One of the things I like to, when I'm meeting someone, is to shake their hand.
Yeah.
It's really as simple as that. I can learn, I think, a fair amount about somebody by their handshake and whether they'll look you in the eye. Those two things alone are really important.
I agree. One of the things I like about the podcast is that it gives me the opportunity to have these kind of long form conversations. And I think it's helped me in kind of building some additional skills that I hadn't fostered. And so that's why I keep doing it. It's fun. I'm having a good time with it.
Look, I think it's great. I've had the good fortune of being on a few podcasts at this point. I enjoy the conversations I have. I enjoy sharing of information and perspectives. That it would even be better if we could be doing this over lunch.
100%.
Yeah.
Yeah.
And here's one thing I noticed, and I don't know if there might be 30 million golfers in America or something like that. It used to be 25 and it was very stable, but I think it's crept up a bit recently. I think COVID actually increased the number of golfers. But one of the things, the golf course is a great place for me to interview somebody. If I want to try to get to know someone, I invite them to the golf course. It's even better than having lunch with them because you see them at their best, at their worst, and everything in between. Because you will hit bad shots and you see how someone reacts to it. They will be under pressure and you'll see how they react to that. Literally all possible human emotions other than love are probably out there. They probably hate you at some point, but I'm not sure it goes quite so far as to love, but all the other human elements are visible. And so if you want to interview someone for a job, if your daughter's dating someone and you want to see if he's a good guy or not, these are all things, and I do it also playing basketball with my son-in-law, but I tend to use what I know. And so I think anybody should try to use the arenas that they understand, and it probably would be helpful in business and just personal relationships.
Yeah, I get up and go to CrossFit in the morning. I've been doing that since 2018. This past weekend, I went to this, it was called Man Camp through church here in town called Crossroads. And I went with a couple of guys that are part of my gym and I saw some other guys that I had worked out with in the past. And it's the same thing where it's not as long as a round of golf, but if you have consistent exposure to somebody and you see how they perform during a workout, are they cheating? Are they cutting reps? Or are they showing up and doing the best that they can, pushing themselves as hard as they can? And that too, I think, can tell you a lot about a person and their character and things like that. And I think that's a great idea. Let's go get a workout. Even if you're not it's the interpersonal aspect of it. It's not about the scores that you put up. It's how do you show up?
Exactly. How do you behave? How are you going to react to situations?
Yeah.
Time on the golf course. I have never played a perfect round of golf, and I've been playing this game a long time. So
Yeah.
times of frustration in every single round of golf.
I can swing a club, but I wouldn't call myself. I was doing lessons last year, the year before, maybe both of them. And then it just fell off.
A huge time commitment to get good at golf. I have a hard time keeping up with it because, as I said, I was a college golfer, took a year after, and I've been able to maintain a handicap, but the handicap system is flawed. It's not your average score. If most people that don't follow the handicap system closely think oh, hey, it's how they are relative to par every time. But it's not. If you keep 20 scores and you throw out your 10 worst scores, it's an inflated or deflated handicap, if you will. If my average over par round, if over 20 rounds is 5 shots over par, I should be a 5 handicap. I'm a 1.5. That just means you threw out a lot of my bad scores. So
Mhm.
means I can't play to my 1.5 on a regular basis, just half the time.
And I would imagine that the course and weather have something to do with it as
Or
well.
the narrowness of the course. Some people hit it wider and offline, but farther. And some people hit it straighter and can play really narrow courses, but can't play long courses. And some people putt and chip well, and some greens are set up elevated greens, which are really hard to chip to. If you got flatter greens, the chippers and putters will do better. They call it horses for horses, depending on who it is. So that's why a guy might win 5 times on the PGA Tour on the same golf course, but only win
Right.
1 or 2 times on another one because it suits the game.
Yeah, it suits their playing style.
So
So-
one of the I wanted to bring up, when you're stabilizing a property, let's
Yeah.
say you are a syndicator, okay? Because a lot of people syndicate real estate.
I have my thoughts on syndicators, so let's
Yeah.
go.
So and I'm talking about it from an operational standpoint and a
Sure.
position standpoint. I wouldn't invest with a syndicator. So that gives you my feeling on it. But because you're a limited partner and being a limited, I never wanted to be a limited partner in anything. I always wanted to have some measure of control over my future. But regardless, those things will continue to happen. And as a syndicator or anyone really raising money for partners, it doesn't have to be a limited partner. If you're looking to raise money or prove to a lender that you're really stabilized, it's helpful to have a property that's performing well, right? And so with our assessments, you can actually use the data to augment your situation, your case, which is great. And so not only can you strengthen up in order to get a loan or to retract investment capital, I've always thought this, if we do a full assessment on a property and we show that they have a weaker leasing team, right? Their score is low or even in the middle of the range, and 100 points turns into a 3.5 point increase in revenue. If they thought that they could improve the leasing team, why wouldn't they use that data when they're assessing, instead of just using a balance sheet and looking at past performance? Why wouldn't they look at the current performance of the leasing team to see if there's upside in a building? That I always thought that this would be really valuable data for investors.
You're talking to brokers at that point. You're speaking the language of a broker by saying,
You're from it.
when we were underwriting properties, the first thing you do is you look at the rents and you say, okay, what are the competitors set based on year of construction, location, vintage, etc. Where are their rents at on a chunk rent basis as well as a rent per square foot. And there's deficiencies with the asset that you're underwriting. Where are the things that you can make up at? And then we use that to look forward. So do you have to do a full value add, or has it been value added and it just hasn't been managed well? That's where the leasing case comes in. That's a lot of, I think, especially so talking about syndicators, a lot of them have gone in and done value adds where they'll put in that millennial gray flooring and walls and kitchens and bathrooms, things like that. So it's a standard upgrade. But at that point, it's okay, what's going to be your differentiator? And in that case, it's really your leasing team. Can they drive people to sign leases at the property?
There's a void. When you're doing your analysis, you're looking at whatever data is available to you. And so far in the world of data, the leasing team's performance, other than the bottom line, other than their actual leases, isn't really put in front of you. So would it be helpful to you to know that they had, I don't know, a 20% closure rate on opportunities versus they closed 80% of their leases? So for me, what that would tell me is if you're closing like 5 out of 6 opportunities or you're closing 5 out of 20, I want to buy the building, or I'd be willing to offer more for a building if I knew I had 20 opportunities that I could put a good leasing team on, because it gives me more revenue.
How are you prospecting for new opportunities?
We're very active in social media. We're reaching out really through LinkedIn mostly. I don't think this is a straight line growth kind of company. This is more of a hockey stick. I think you go like this and then you just go this, because I think once people realize that we're better than the Grace Hill, check the box. Yeah, I train my people. Okay, check. Customizing it and making it fun and having an impact, I think we'll have some pretty quick growth. Right now, all we're doing is laying the groundwork. We're going on LinkedIn and we're trying to reach people and let them know we're out there and available. But
Mhm.
how to reach out to the investor slash brokerage community, I'm open to suggestions. We've had a couple of conversations and people have said a lot of what you said, but we really haven't captured a pathway to success there yet.
Here's some thoughts. On what you could do is you could use Needle to reach out to the property owners and say, hey, your property's been flagged as a likely sale candidate. Would you like to get more dollars for your asset, assuming that you're interested in selling? And it's not even assuming that you're interested in selling, for your loan proceeds,
Oh,
for your investors.
management, all the things.
So you could use Needle.
Absolutely.
I'll show you a demo.
Yep.
The second thing I would do is start stalking brokers and say, hey, do you want to have a plan, an implementable plan that you can put into your marketing materials that says, here's the current score. Here's what we could do with it, which will then in turn increase revenue and collections, and then therefore increase the sale price, therefore helping you hit your valuation range and help you close the sale, because they're going to be selling it to the new buyer. And that's your user, because the new buyer is going to come in with the eye of, I can do better than the last guy for whatever reason.
Right.
Brokers sell hope, essentially.
Yeah.
And so one of the things I've been doing, I've been going on some of the listing websites and pulling down information and creating customized messages and reaching out to the brokerage community to say, hey, congrats on your listing. How's the traction going? Oh, by the way, we help brokers like you get in front of deals before they go to market. And we also have a buyer matching function so that you can get a listing. You can then look at our buyer matching, go to those buyers. And what we found is that 70% of the time we've identified the buyer. So those are a couple of thoughts for you.
We aren't actively promoting product right now to the brokers market. This is absolutely something we're promoting the training side more than we're promoting the assessment side. So,
because I think it depends on what your pitch is, and you just go through a bunch of iterations of that.
yeah, you would know what messaging would work better than we would.
Yeah, and you got to speak to the valuation, and you're going to talk to both the brokers and the owners about that, and you back it up with data and case studies, and say, here's a cart: challenge, action, result, testimonial. Here's a property. Here's what we did. Here's what happened, and then here's the owner singing our praises, or whoever it was.
Yep.
And you could have a cart specifically for owners, and then you could double purpose that for brokers and owners. I'm sure you could come up with a couple of them that say, here's what we've done.
Let's have this discussion. We'll exchange info and get a conversation going.
I love it. That's great.
I've had a couple of conversations like this and they went well. Talked to CV, I've talked to some independent brokers, a few others, and everyone seems to see this, but I'm not sure they really haven't grabbed it and wanted to run with it. And so either were too busy or they didn't feel like the clients they had in mind were going to pay for it. And this is not cost prohibitive in any way, shape, or form.
Yeah, I think if you can just prove out the value, honestly, we're having similar challenges as well, of even just getting people to have. I was supposed to have a bunch of different demos today, and I had 2 reschedule, 1 ghost, and 1 just straight up cancel. Don't you want more deals? Like, I don't get it.
So
Brokers,
their stash, really, it's not all up and all down right now. There's a lot of, it's almost like you're in this whirlpool. It's like you're stuck in the middle here, and there's forces pulling you one direction, forces pulling you another direction. It's been a washing machine right now.
What we're seeing is the result of the low 0% interest rates from pre-COVID on through and during COVID. And then what they did is they jacked them up. And so what happened was you had all these buyers going in buying at a 3.5 or 4 cap, thinking that they could sell it for a 4 cap. And now they're at a 6 to 7 cap. And it's like they can't pull the trigger on that because they're going to lose money, which nobody wants. And in the instance that they secured fixed rate debt, they're just going to ride that out until they have to refi. And then if they're going to refi, they'll probably refi at a higher rate than they were at. And they'll probably be fine with that. But the ones that can't refi are going to have to sell. And I was talking with some developers, and they were talking about Arizona and Phoenix, and developers having to do cash in refis or sales, essentially short sales on brand new product. And that's a factor of
There's a lot of soft markets out there right now. Austin, Texas is overbuilt by 20%.
Yeah.
Tremendous rate recession right now. The rent is going down they don't know what to do with them. I had one guy call me. He has 22 properties in Austin, and he's struggling on a number of them. And then another one had 2 properties, struggling on both of them. And so this is a time where there'll be winners and losers. And I would want to be capturing every dollar possible right now. I don't see any reason. Is there any good argument? Try to answer this one. Is there any good argument for not having a well-trained leasing person?
No, especially when you've got to fight and scrap for every dollar.
Exactly.
Yeah. It's what you focus on.
Actually, you don't have to do anything. All you got to do is sign up and just make sure they're doing their homework.
We do it for you.
Exactly. The good thing is not much time commitment from management and oversight.
Yeah. I don't know. The market today is a challenge, to say the least. So,
in a tough time, and we're in a relatively confusing, tough time. I would say it's a time to really perform. It's a time to reduce risk, to stabilize. There will be winners and losers. I don't see any reason to not be on the winning side. It's an opportunity. When there's turmoil, there's opportunity.
Yeah. I think the winners are going to be those that can execute well, and the losers are going to be those that get in thinking it was easy money and then figure out, oh, I'm actually trying to catch a falling knife here.
And so think about the industry. I think about multifamily all the time. So all I heard for the last 3 or 4 years in multifamily discussions, and that's in multiple sites, online, in conferences, just general discussions, is cost consolidation, cost reduction, cost. I don't think I've had one person talk to me about capturing the revenues in a better way. And you and I both know revenues grow faster than costs are reduced. There's only so much cost reduction you can do. You have to operate the business. There will be costs. There is no reason not to perform better on the revenue side. It's a bigger bucket. But no, it's talking about that bucket. I come back to the same place. I know I come as an outsider into this business, but it's given me a fresh perspective. I'm trying to help.
Trying to get into multifamily.
Good news is this. My partners are both multifamily, multi-generational multifamilies.
Okay.
For me personally, I think the hardest thing is to get people to think outside the box.
Yeah.
Something that is new, innovative, different. I like to think of things that are they're doing value add. I like to think of these products as value add. Add value to your people, which will add value to your bottom line. Yeah, I think so too.
Value add.
I just say it.
We'll wrap it up here, but if you could go back in time, any time period in history, you can't change anything, but just to see it, where would you go and why?
You're talking to someone who likes to read historical fiction, and I like the Netflix series on that have historical fiction too. I tend to like to understand other eras where we didn't have all of this advanced technology and advancement. If I had to pick one time to go to, I think I might go prior to the Industrial Revolution or just when it was coming out, because I think that was one of the biggest change eras in the history of the world when things got
Yeah.
mechanized and factories were built. And it would be fascinating to be part of that evolution. I would love to be there. I would think
Yeah.
it'd be just an amazing time. It would also be interesting to go back prior to World War II and see if you could help avoid that war somehow, stop the genocide, stop the invasion of Europe and all the things that happened from that. That would be from a personal standpoint, I would love to be in
I
there.
Yeah, I think if you're going to do that, you'd really have to go back before World War One, because
Agree.
World War II is a direct result
Right.
of
The,
one.
the result in Germany as a result of World War One created an environment in which someone like a dictator could walk in.
Yeah.
And you're right. I think prior to World War One, I'm probably back to the late 1800s or early 1900s.
Yeah.
Where would you go?
That's a great question.
You asked it.
I would love to go see the Aztec Empire, see it kind of right before Cortez got there at the height of it. I've always been fascinated with those people. And I think it's a shame what Spaniards did to decimate that culture. So,
For the first imperialist, right?
yeah, it would be interesting to see that and just see how rich that culture was. What I'm curious about, you have these stories of their myths, and like, why hasn't somebody made a movie out of their, I guess, religious mythology, or you might say? Because
Yeah, it is fascinating. I've seen it incorporated into a couple of movies, but never a documentary style movie made on that.
I bet you could do a kids movie out of it. You could make a whole franchise out of it. It's my next step once
Maybe it's a Disney movie.
I have had a wonderful time, and I really appreciate you coming on today.
Thank you, Stash. I enjoyed everything we talked about. It's been very interesting and informative for me.
So if somebody's interested in getting in touch with you, what's the best way to reach out?
Probably through the website. I would say rev-leasing.com and book a demo there. You can learn a lot about us on the website.
Thank you so much, and I hope you have a great rest of your day.
You too. Thank you. Appreciate it.
That's it for the Stashcast. Subscribe, share, and stay ahead in commercial real estate and prop tech. See you next time.